What's going on? Joel Richards here. We've certainly lived through some interesting times of late, and 2023 doesn't look like it's going to be much of a let up on that. As a mortgage broker and an economist by training, I like to keep my eyes on the trends that are shaping Canadian real estate so that I can provide better advice to my clients going forward. With that in mind, four trends that I'll be keeping my eye on throughout 2023 are interest rates, shifting supply and demand dynamics within the real estate market, rising rents, and interprovincial migration. So, jumping straight into it, let's talk about interest rates. At the start of 2022, I think everybody agreed that interest rates had to rise throughout the year. Very few people could have predicted how dramatically they would have risen. However, there was a fairly strong consensus that they couldn't stay at the rock bottom levels that we had seen for the previous 2 years. Now, going into 2023, we're at much more elevated interest rate levels, and I think there's a lot less of a consensus of what's going to happen going forward. Central banks around the world, including the Bank of Canada, have been adamantly hawkish that interest rates have to remain higher for longer in order to sufficiently stamp out the persistent inflation that we've been experiencing. However, many financial markets seem to be less certain. If you look at various bond markets and futures markets in various markets around the world, we're seeing what is called an inverted yield curve. And so what that is when shorter term rates are higher than longer term rates. And historically, that's been a strong indicator that a recession may be looming and we may see lower interest rates sooner than later. So various financial markets seem to be actively betting against the stance of central banks and betting for lower interest rates in the near to medium term. So I think interest rates will be something that's very interesting to keep our eyes on throughout 2023 to watch how that shapes up. Now, moving on to supply and demand dynamics within the real estate market, interest rates have played a large factor. So throughout basically the second half of 2020 into the first quarter of 2023, low interest rates spurred a lot of demand in the market, and we saw that we were firmly stuck in what was called the seller's market. So there was a lot of demand relative to supply, and that drove prices up aggressively. Since then, the Bank of Canada has slammed the brakes on that with 7 consecutive interest rates hikes throughout 2022. And what that has done is it has reduced the purchasing power of a lot of borrowers by reducing how much mortgage they can qualify for. And so this has significantly poured cold water on real estate markets across Canada, in certain markets more than others. And so now we're seeing a lot more balanced conditions within the real estate market. Properties are taking longer to sell. There's relatively more to choose from for buyers relative to the demand that's out there, less competition for those properties that are on the market. And so this is giving buyers more negotiating power, and generally it's a better time to be a buyer than it has been over the past couple of years. Now, if you are a buyer who's still in a position to participate in the market in 2023, there could actually be quite a few good buying opportunities as more and more people choose to or are forced to, by higher interest rates, sit on the sidelines, sit out of the market, and thus there's less competition. And so you may have an opportunity to secure a quality property at a decent price. If interest rates do start to come down, tough to say whether that'll happen in 2023 or further in the future, but if interest rates do start to come down, there could also be a golden buying opportunity where you can secure quality property and lock in a lower fixed interest rate before property prices start to accelerate again. So watch out for that. Moving on to the third trend that I'm watching, which is rising rents. It has definitely gotten more expensive to purchase and own a home from a monthly cash flow standpoint in 2022 and going into 2023. But sitting on the sidelines and remaining a renter has also gotten much more expensive. So we've seen the average rent across Canada rise by on average 12%. And in certain markets, we've seen year-over-year rental increases in excess of 20%. So it's certainly gotten much more expensive from a renter standpoint as well as from a homeowner standpoint. Now, rising interest rates aren't helping this dynamic either, because it's forcing more people to sit out of the purchase market and thus remain renters. And so that is continuing to prop up demand for rental properties. Not to mention any landlords that have brought properties onto the market in 2022 and going into 2023 will have financed those rental properties at elevated interest rates and thus not have the margins to reduce rents in the future, and they'll pass on those higher interest rate costs to their renters. Additionally, any landlords that have had to renew or refinance their mortgage over the past year and going into 2023 will also be subject to those higher interest expenses. One final factor that's affecting elevated rent costs as well, and will continue to do so into the future, is immigration. So between now and the end of 2025, Canada is expected to welcome roughly 1.5 million new immigrants to its shores, and many of those people will become renters, putting further pressure on the rental market. It will be interesting to watch how these rising rental costs affect the dynamics of the real estate market from a purchaser standpoint as well. And investors also want to be keeping their eye on these rising rents. Now, finally, the fourth trend that I want to mention is interprovincial migration. So different than immigration, this is migration between provinces. So it's obviously no secret that cost of living has gone up in a lot of areas, not just with higher interest rates, but also with higher fuel costs, higher grocery bills. And so people are feeling spread thin financially. And this is proving to be a strong motivation for a lot of people to pull up their roots, move across the country in search of a better cost of living for quality of life balance. And so this is causing people to leave the most expensive markets in Canada and move to more affordable markets in Canada, such as Alberta and the Maritimes. Alberta specifically seems to be the destination of choice for most of Canada, and with good reason. Cost of living seems to be a driving factor. In Alberta, fuel costs are low, we have low provincial taxes, and the cost of housing is relatively affordable compared to some of the more expensive markets in Canada. So a home in Calgary or Edmonton can cost anywhere from a half to a third of the price of Canada's most expensive markets, such as Toronto and Vancouver. However, you can still attain a fairly similar quality of life. In fact, Calgary was recently ranked the most livable city, not just in Canada, but in all of North America by the Economist Intelligence Unit's annual survey that they do, and also the third most livable city in all of the world. And cost of living, balanced with a number of other factors, played a large part in that. So yeah, it's no secret why people want to move to places such as Calgary, Edmonton, and the rest of Alberta. So this will play out in the respective real estate markets of the provinces in question, as net migration inflows to places such as Alberta and the Maritimes will see higher levels of demand for real estate, both from a purchase and from a rental standpoint, whereas provinces that are experiencing record levels of migration outflows will see softer demand in their provinces. Now, I do want to note that this is just net migration that I'm talking about. When we add inflation onto that, populations are still growing in most of these provinces. So when we're talking net migration, we're just talking about the people that are already living in Canada and choosing to move elsewhere in search of better cost of living. So I think this will be another trend that will shape Canada's real estate market throughout 2023. So I hope you enjoyed the video. I'm going to wrap it up here. If you like the video, please hit like, subscribe, and share, and I'll be back again soon with another video. If you do want to talk about how any of this might affect you personally, please feel free to reach out to me. I'm always happy to talk. Until then, my name is Joel Richards. This is the Richards Mortgage Group, and we'll catch you again soon.